they're not around anymore, unfortunately. It kind of sucks, but hey, it is what it is. Businesses are always coming and going, and if you're not changing and adapting with the times, then you're just gonna go that way. So it is what it is. Love it. But yeah, today I really need to get better at my PowerPoint presentations and like stuff like that because I do understand that. Hello. I do understand that there's a lot of visual people out there, and it's hard to listen to rants and stuff sometimes. But I wanted to. Okay. I wanted to talk about something that is very well misunderstood these days, and that would be insurance. The dirty word. That doesn't have to be so dirty, though. That's a problem. Excuse me. Most people think that, the way that insurance works is I live, I die, somebody else gets rich. But that's not the case, really. I mean, that's sure part of it if you want to look at it like that, but there's a lot of uses for it outside of an inheritance, is what you would call that. You can you can actually make money off of your insurance policy. Did you know that? There's two types. There's two types of insurance in Canada, anyways. You got your term policies and you got your permanent policies, and this is how it works. So I don't have a presentation or nothing set up, so you guys are just gonna see me flailing my hands around like crazy. But this is the way that it works. So you got your term insurance. You pay into it for X amount of years, say 10 years. At the end of the 10 years, your policy renews at your current age. The price goes up, sometimes 3 or 4 times, and you got that for another 10 years. Now, you can't convert it into a permanent policy, but that's a little bit, I'm not going to get into the complicated stuff here today, just going to give a brief overview for everybody. And that's how it works. So typically you want to use term insurance to cover off loans, to cover off debt. If you're a new family, you're just, you got a kid on the way, you're getting your first house, that kind of stuff. Term insurance works really well because it's cheap and it gets the job done. So you don't, it's protection for your family. You know that if something were to happen, I mean, look at recently, with all the snowfalls and stuff like that, there were like we had that one weekend there back in January where there was like over 600 accidents, and like luckily the casualties were minimal, but in terms of disabilities and stuff like that, I mean there was a lot of injuries and stuff. And what would happen? It's nice to know that your family can carry on if something were to happen to you, because we never planned for anything to happen, but it can happen and it will happen. It's for a 35-year-old, there's something like a 76% chance of dying, becoming disabled, or sick before age 65. Like, those are some pretty high stats, and we're not going to get into that too much today. So that's how term insurance works. It's very simple, it's very basic, it's very easy, and it covers off different short-term needs. Now, you want to make money on your insurance policy, I did bring that up earlier. The way to do that is with a permanent policy. You got two types. You got a universal life or a whole life policy. They both have your insurance component, your face value. They also have a bucket of cash. So say your premiums are $150 a month based on your age, your smoking status, your health, that kind of stuff. Say you're putting in $150 a month and your premiums are only $80. Well, you now have that out of the $150, the $80 comes out to pay the premiums. That extra $70 goes into the money bucket, and over time it grows and it grows and it grows. That is how you accumulate wealth within an insurance policy. It's tax efficient, it's tax sheltered. I know they've made a lot of changes to the rules last year and stuff, and they've they're really sick of people abusing the system, and they've limited how much money you can make in the policies and the contributions and stuff, but it is still a very effective way to build wealth. It is a strategy that I implement quite often when I'm working with clients, because you can get mortgage insurance for your house, which is it's great, but all it does is protect the lender. It does nothing to protect your family. It just guarantees that the lender gets their money. If you were to do a life insurance strategy on your house, it does more to protect your family than the lender. Maybe you don't want to pay off the full value of your mortgage. Maybe you want your spouse or your kids or whoever to have options of flexibility, and that's why you would use life insurance for it. So typically what I do is I'll put a larger term policy, but I'll also couple it with a smaller permanent policy, because a permanent policy you're going to have with you forever. You can have it paid up and stop paying your premiums in 10, 15, 20, 25 years if you want. And the cash values, as long as they've built up enough in the policy, it'll keep going indefinitely. It doesn't expire when you're 75. It doesn't expire when you're 100. It stays with you forever. The brilliant piece about this, I did it for my mom. What I like about it is it also couples as not an emergency fund, but a retirement fund. How cool is that? You now have an extra bucket of cash going forward in retirement. You can make withdrawals from it. You can buy down the interest of a loan. This is especially important for us entrepreneurs and business owners out there. And sometimes we just need a loan to whatever it is. Maybe we need a loan to help us free up some cash flow until a job is done. Maybe we need a loan to purchase a business, expand our business, who knows. Well, what you can do is you can take this permanent policy. If you have the cash in there, you can leverage it and take out a loan against it and actually buy down the interest of the loan. It's basically a secured loan at that point. You're not relying on your RSP or an unregistered account or whatever the case may be in order to secure the loan. So it does act as leverage in a lot of different ways. I do like the fact that it's an extra pot of money for retirement. If you don't use the money, it goes straight to the beneficiaries tax-free. You really don't have anything to worry about. It's like a win-win-win. Okay, you know what? Your kids are little douchebags. You may not like them, or maybe you're divorced or whatever, and you're like, well, I don't want to give these douchebags any money. Well, that's okay. And do you have a charity? Do you have some sort of a cause or a nonprofit or something like that that you hold really near and dear to your heart? Because you can also make them the beneficiary of the policy, and as your as the last bit of your legacy, you can actually donate to a cause or to something that you've held very near and dear to your heart for your life. And it's brilliant, and it's a versatile product. There's a lot of people out there, they have stigmas and they don't like it. They want nothing to do with it. They've had a bad experience, whatever the case may be. There's cases, some people haven't purchased. Some advisors, I mean, you get it everywhere. You get bad apples who don't do a good job of explaining how stuff works to clients and helping them understand and picking the best policy for them, which I don't agree with at all. Check out my Serenity Blueprint if you really want to get down and dirty into that kind of stuff. You pick a policy, I write you a letter, I explain this is the insurance carrier that you've chosen, this is the name of the policy, this is the death benefit, I lay it all out for you in a nice big long letter, and we both sign off on it, so that if anything happens you can go back, oh yeah, this is why I chose this insurance policy, this is what it does for me, this is how it works into the rest of my plan. And it's flexible, right? That's the main thing. Life happens, things are always changing. The last thing that I want as an advisor is to have somebody get stuck because of choices that we made or agreed to make. So always keep it flexible. But yeah, I guess I'll just sum it up and wrap it up with that. You can use it to accumulate wealth. You can use it as a retirement fund. You can use it as a vacation fund. You can use it in a business. There's a plethora of ways that you can implement insurance beyond making somebody else rich if something were to happen to you. And I encourage each and every one of you listening to this video to consider to consider reaching out to myself or somebody else, and just having that talk, right? It's not always an easy talk to have. It's not always a fun talk to have, but if it protects your kids, if it protects your family, if it protects your business, the other use, if you want to talk about business, because I know there's a lot of business owners out there that follow me, another use for these policies in your business would be buy sell agreements. If you have a business partner and you say you have a business partner and you just really don't like her husband, he has no business, he has no business and no desire being in the business, operating and being involved. Well, if something were to happen to her, if something were to happen to your partner, and she were taken out of the picture unexpectedly, well, typically her husband is gonna be stepping in to fill her shoes, unless you buy him out. And well, how are you gonna buy him out? Where's the cash gonna come from? Right? So there's all sorts of different fun, interesting stuff to talk about, and that's really all of that is just a small piece of the overall pie that makes up your financial household. So yeah, I hope you guys enjoyed this. I hope I cleared the air a little bit about insurance. I just wanted to give a very brief high-level overview about what it is, how it works, different uses, that kind of stuff. I hope you guys liked my video. Give me some love, like or comment, give me a share, whatever you're comfortable with. It's cool, man. I appreciate it. I'll see you guys around on the next video. If you guys have any questions, any concerns, down there somewhere in the description box, I got my contact information and all my other social media and stuff down there. So hit me up. I don't always look like a hooligan, I promise. Cheers.